Hi, welcome to Accounting Play. Today we are going to be talking about equity T account transactions. Now, prior lessons we have transactions for assets and liabilities. Now, equity T account transactions are going to be similar to liabilities. Now, if you don't know, I'm John. I am, in essence, Accounting Play, making apps as well as this lovely Learn Debits and Credits resource for you. Get on the site free. Also, accounting cheat sheet. Yeah, accountingplay.com/downloads. Let's hop right into it. If you haven't subscribed, subscribe. Email me, john@accountingplay.com. So, in just a moment, we are going to get right into this extraordinarily exciting content because equity matters. Let's take a look. Here we're on retained earnings, but just one of the many equity accounts that are possible, common stock. I'm going to take a quick pause and come into our ebook here and look at equity. Equity is kind of an abstract thing. What is equity? In accounting terms, it's common stock, preferred stock, treasury stock, additional paid-in capital, and retained earnings. Now, let's take a second just to talk about equity in general. All right. What is equity? I don't know. No idea, really. It's assets minus liability. So everything here about home equity, well, how much do you owe on the home, your liability, and then fair market value. The difference between the two is your equity. It could have negative equity, underwater in your house. So hopefully you know that stuff. Now, in debits and credits terms, you increase equity with a credit. So equity credits are good. Credits to retained earnings means you've been making money. When you credit common stock, you've received cash in exchange for common stock. So let's just get right into the T accounts. Come on. Back into the T account world. Let's look at Excel and do some equity account transactions. Common stock, good old common stock. Businesses, large corporations, issue common stock to raise money. What's happening here is the company is receiving money and the shareholder is receiving an investment. So let's say 100,000. Notice these are all increases. Credits, 100,000. Now, the debit side of this transaction is going to be cash, but we're not going to worry about that right now. We just know common stock has been credited by 100,000, increasing common stock. Now, increased by 20,000, 10. So what's happening here is, in this case, multiple shares were issued at various different times. Now notice there's no debits. Debits to common stock, you're not really going to see that in your first financial accounting class. So common stock is crediting up here. So 380,000. Is it that easy? I think it's pretty darn close. Now, let's talk about retained earnings. Much different of a beast. Retained earnings is essentially the sum of prior income statement profit or loss, or net income or net loss. It's kind of an abstract account. Dividends also come out of retained earnings. So if you see a company, a tech company, that has huge negative retained earnings or a debit in the retained earnings, it means they've been burning through cash and supporting themselves through loans, investments, or other means. So let's just go ahead and buy the book, Debit and Credits, these transactions. Now, credit, equity up. Credit, equity up. Just gotta memorize it. If you know one half of the other transaction, you might know that if you debit equity, it goes down. So check it out. Increase 20,000. What would make retained earnings increase 20,000? That would be net income. Great. Now to decrease retained earnings, what would that be? A net loss. All right. That explains how these transactions came about. Must be just memorized. Increase 200,000, 200,000. Great. Now let's say this is happening on a quarterly basis. And again, increase 50,000. Now this is all summed to 273. But notice this should actually be reducing retained earnings because it's a decrease. Decrease on this side. I'm going to go ahead and sum up the balances on both sides and see where we end up. The credit side is greater, therefore there is retained earnings at the end. Let's go ahead and get this in here. 270,000 credit minus the debits, also referred to as netting these two out. And then the ending balance is going to be 267,000. Okay, that explains essentially what's going on here. Equity increases with the credit and decreases with the debit. Now, the equity account is going to be the result of income minus expense will flow into the retained earnings equity account. Other common equity is going to be common stock, additional paid-in capital. There is a such thing as contra equity, but it's much more advanced, and it shares the same similarities as other contra accounts where everything is opposite. But as not to confuse you, we just want to remember to increase with a credit, decrease with a debit. So, equity is a little bit of an abstract account. It very loosely is the value that's in the business. Now, the other way to reduce retained earnings is not only a loss on the business, but when dividends are paid, they're paid out of retained earnings. Dividends are never an expense. So from the top, retained earnings T accounts, or equity T accounts. Equity T accounts are as follows, the transactions. Increase equity with a credit. Decrease equity with a debit. Memorize this. Common stock increases with the credit. Credit common stock up, credit common stock up, credit common stock up. Now, when we go to retained earnings, it's possible it will be on both sides of the T account. All right? So, when you have a profit, credit retained earnings. Equity is a good thing. You want equity going up. Increase equity with the credit by making money on your income statement, by having a profit. It's possible to have losses, which would be debits in the retained earnings. When money is paid to the shareholders via dividends, it reduces retained earnings. Now, retained earnings is affected by the income statement. Those are the keys. Equity, increase with the credit, decrease with the debit. Make sure you go through all the exercises. Thanks so much. This has been accountingplay.com/downloads.